Hello friends, this will be a longer video, I suppose. It is about my trading plan. As I said, this is Scrivener, my favorite software when it comes to organizing information or data and my life as well. So these are the various sub-chapters I have in this so-called life plan. So this is my mission and my forward in German. Then I have my goals, monthly goals, yearly goals, weekly goals, wisdoms and must-reads, where I put my favorite quotes. My diary, here I have a diary. Everything about trading, education, my trading plan is in there, my goals in trading and so on. Then other business projects and blogs. Something about style. I like to collect pictures of outfits I like. Nutrition, fitness, finances, and consumerism. Here I write down all the books I read, all the TV series I watch, all the video games I play. You can see I really like to keep track of data and this is a little bit more friendly than doing it in Excel. Actually, this software was designed for writers to write books or your master thesis or something like that. But well, I have been using it for another purpose for many years now and I really like it. So without further ado, let's scroll down a little bit to the trading section. And by the way, also I have all the videos I ever watched, all the books I ever read and so on are also in here, so I can keep track of everything I ever consumed to improve my trading knowledge, and that really helps to stay organized. So trading. Firstly, the mission. Why am I trading? I want to be financially independent. I want to do what I love and love what I do. I want to create the best possible life for myself and my family. I am passionate about what I do with the money I earn, or it will mean nothing to me and I will fail. This is especially important. If you really want to be the best trader you can be or a profitable trader, then you need to find the purpose, what you're going to do with all the money you make. If the money you make means nothing to you, then, or maybe you even see it as a bad thing to be rich, then it will be really hard for you to become a profitable trader. And I will invest as much money as possible into passive income. I will milk the shit out of capitalism as long as it's still breathing. Make no illusions. Capitalism will go down the drain and maybe humanity with it or not. And whenever that happens, it's going to be a very interesting time. But until that happens, I will make the best out of this fucked up system. Then I will transition slowly but surely from day trading to daily and weekly charts, simply to have more time for myself and my family, and I want to be the happiest and best version of myself that I can be. These are all the things I want to reach with trading, right? And then how am I going to reach that? Because I work harder than the other traders, I am more focused, I am relentlessly process-oriented. I am incredibly disciplined in following my trade plan to the point. I relentlessly manage risk and leverage. I trust in myself. I trust in my edge. I trust in the power of statistics, probabilities, and compounding. I am patience. I am Zen. I am a professional trader. This really helps a lot, especially this. If you are not yet a professional trader, before you start trading, every day you say to yourself, I am a professional trader. And then you will start having those habits, like a professional trader, only because you're convinced yourself that you are already one. You will be more disciplined, you will do your journaling and so on. I do everything I can to increase my performance at charts, sports, nutrition, sleep, psychological health, and I am in total control of my emotions, my body and my mind. And most importantly, I take only trades I absolutely love. And if I have to sit there for a whole day, not loving one trade, then I don't take a single trade. Period. I only take the easy ones. I only take the ones that make sense to me. I only take the trades where I know what the heck is going on. 90% of the time, the chart does not make sense to me, and I don't do anything. Okay, here are my trading wisdoms and my must-reads. These are basically quotes which I found over the years to be very helpful, or which I use to pump myself up before a session, or to bring myself into the right psychological state. So, fear of missing out. When you can miss a trade comfortably, that is when you will be able to trade profitably. Let this one sink in. If you really understand this, you will be a profitable trader. The 6 keys to trading success. I can't remember who that was from, but it was a good read. I really like it. Successful trader is selective. Successful trader has made the approach his or her own, has found a niche, is creative, is always seeking improvement, is persistent. This is the Factor LLC trading plan by Peter Brandt, a trader which I really respect a lot. You can find it on his homepage as well. Simply Google Peter Brandt. Then this quote from Mark Weinstein I liked a lot. Don't get too complacent once you have made profits. As we are in a leveraged market, sooner or later even a monkey will make profits. Keeping those profits is a whole different story, however. And consequently, for many people, attainment of that second goal is not as rewarding. Alright? They may begin to question what they really want from trading and trigger a self-destruct process in which they wind up losing. This is incredibly powerful. And Paul Tudor Jones, don't be a hero, don't have an ego, always question yourself, don't ever feel that you are very good. Coming from one of the best traders in the world. The motto of each trading session, this one I wrote myself: you are an observer, you observe. You are not going to trade today. I am going into this trading session with the expectation that I am not going to take a trade today. I see myself as an observer, not necessarily as a trader, in this regard. Mark Douglas, in the flow, again, classic. The best traders stay in the flow because they don't try to get anything from the market. They simply make themselves available, so they can take advantage of whatever the market is offering at any given moment. There's a huge difference between the two perspectives. Yes, there is, and it makes a huge difference to your bottom line as well. Once you are in the flow state, the money will come into your trading account so easily that you won't even believe what the hell is going on. Again, the 5 fundamental truths of trading and the 7 principles of consistency, again from Mark Douglas. Trading in the zone, if you haven't read it yet, do it. So anything can happen anytime? Yes. You don't need to know what is going to happen next to make money? Yes. There's a random distribution between wins and losses for any given set of variables that define an edge? Yes. An edge is nothing more than an indication of a higher probability of one thing happening over another. Very true. Every moment in a market is unique. Again, very true. Even though we look for patterns that repeat themselves, every moment in the market is so unique that you can never expect to make money, or you can never expect to lose money on a trade, because there are millions of market participants. Every moment in a market is truly unique, and we don't know the outcome of any of those moments. The 7 principles of consistency: I objectively identify my edges. I predefine the risk of every trade. I completely accept the risk, or I am willing to let go of the trade. I act on my edges without reservation or hesitation. I pay myself as the market makes money available to me. I continually monitor my susceptibility for making errors. And I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. Let this sink in. These 5 principles and these 7 principles and these 5 truths of trading, let these really sink in, and you will see the market with different eyes. And this one I wrote myself again. When you are profitable, you will feel like a fraud because the money will flow magically into your account with such an ease that you will never believe it took you so long and that no one else is doing it. You will just be like, what the fuck? Yeah, let this sink in as well. And maybe you don't understand it now, but you will understand it soon enough. Okay, so let's go to my system. I trade 2 systems at the moment. We will only look at the Wave Rider system, as I call it. Here, the last iteration was on 16th of March 2017. I will review my system regularly based on number of trades taken, and if needed, I will make adjustments to it. So the last adjustment I made, I will show you very soon. It's actually quite a big one, giving me a lot less trades, preserving my mental capital, but also increasing my bottom line. So, markets traded. Firstly, in Forex, I trade these markets, copy this list down. Trading times, if I see something juicy, 3R plus to next pivot, AAA setup with 3 or more confluence factors, I certainly get in, even if it is outside of my regular trading hours. Because I'm working a lot in front of the screen and I always have my charts open. So sometimes I see something really, really good develop during the Asian session. And then why not? Why should I not take advantage of this? My regular trading hours are from 1 hour before Frankfurt open to 2 hours after the London close. Trading stops. Psychologically, when feeling physically sick, having a headache, or when you're tired, don't trade. When you're depressed, down, euphoric, over the top, I like to call it Autobahn brain, or have a lot of things to do that fly around in the back of my head, I don't trade. Regarding monetary performance, if I lose 50 pips in a day, I stop trading. If I lose 250 pips from the peak, which is equal to 25% equity loss from peak, then I stop trading for the whole week. Then I analyze my performance. Maybe the strategy didn't fit the market, but was executed flawlessly. Then I have to do better market selection. Or the strategy fit the market, but I executed it badly. Then I need to find out why. For getting back in the game, I need half the position size as usual to rebuild confidence. And I don't go back to the original position size until I gain back my loss. This is a good exercise in diligence and humbleness, and believe me, it saved me a lot of money. Elements indicators, so timeframes. I use the M15 for the bigger picture, trend, patterns, and M5 for momentum, patterns, and looking for my entry trigger. Pivot points, classic pivot points applied to New York close. Not much to say here. Stochastic, as you know, 1133 with levels 80-20. And the RSI 10 with levels 45 and 55. Tools I use. Economical calendars, I use either one of these. Technical tools, of course, I use Edgewonk. And for taking screenshots, I use Snagit. And how do I deal with fundamentals? Dealing with news items. Don't take trades 30 minutes before high impact news. If in trade in a loss and high impact news comes around, then close the trade. If in a trade in a profit and high impact news comes around, minimize your risk by going to break even or putting your stop in a logical position, minimizing your stop loss distance. If you have no clue what is moving price right now, get out, stay out. Unless the spike is moving into your direction, then trail the stop closely. Very easy, very straightforward. And sometimes you can't get out and price is moving against you, then just pray that you don't over leverage and that your broker has guaranteed stops. Daily routine and preparation. In the morning I check the economical calendars, I note down high impact news, I go through yesterday's notes and trades. Did I make any painful mistakes or any accomplishments? I look at 10 AAA trades of the past before taking any trade. I go mentally through my checklist. I know exactly what I'm looking for. I make sure all past trades are journaled and documented. And then I go through this complete trade plan. Did I miss anything? This is like flying a plane. You miss to tick a box, you crash and burn. Bitch. I like to insult myself, just to make the point clearer. No offense to the female listeners, but this is just so important. Okay, I go through this whole thing every single day I trade. I do it in the morning religiously. It's like a prayer to me. I'm actually not religious, so I save a lot of time, but yeah, this is my prayer. When taking a trade, this is easy. Take a screenshot right after entry with Snagit, or take a screenshot right after exit with Snagit to put in the H-Wonk. After I finish trading, then usually it's quite late in the day, so I still enter all my trades as long as they are still fresh. I review them and I make session notes so I can go to bed satisfied and wake up the next morning prepared for the next trading session. So now we go into the technical stuff, how to define the trend. Highs and lows, very easy. I use absolute highs and lows and their breaks and retests to find a trend. I trade with the trend 90% of the time, unless a head and shoulder develops. This is really the only time when I trade against the trend, but usually my head and shoulder patterns, before the right shoulder develops, the high or low stabs the last high or low already, so we are in kind of a changed trend already. So this is how I mark up my charts, usually all the absolute highs and lows. So here we are still in a downtrend until this thing breaks. Let's take a look at patterns and technicals. Rising wedge, easy, falling wedge, symmetrical triangle, flat top triangle, flat bottom triangle, double top or bottom, triple top or bottom, double top or bottom fake out. So here we have a double bottom, and then we broke below this double bottom. We quickly came back up and broke this local trend line. Those are great trades, especially if we bounce from another SR flip zone. Triple top bottom fake out. Here we have the triple bottom. Again, we fake it out and we fake through this trend line here as well. Come back up, take out this trend line and the pivot. Could be a good trade. Head and shoulders. Okay, they can happen on a major scale, like here, left shoulder, head, right shoulder, or on a minor scale at a pivot, left shoulder, head, right shoulder, neckline break. Great position of stocks and RSI. Yeah, good trade. Bear flag, not much to say. Bull flag, same. Expanding channel, alright, I don't really like these. I trade these from the boundaries, but never at the breakout. Fake outs, they happen all the time. For either swing points, okay, so here we have a swing point, we broke below it, came through the upper trend line. Then here, you know this one already. Then here can also happen to trend lines. We broke through this trend line, came back below it, broke the local trend line, and kept on moving into the direction of the trend. They happen all the time, so as always, when something happens all the time, you want to have other qualifiers along with these patterns. So fakers make really great trades if taken in the direction of the trend. And our horizontal channel or range. These are all the patterns I look for. Then our entries. DZD breakouts. Drive channel drive structure is a breakout. The entry candle or shortly thereafter has to break our channel structure. Stock has to come from oversold or overbought, and the RSI cross out of the death zone. So as you can see, we had a drive up here, grind down, flat bottom triangle, breakout. Great stocks, great RSI, good trade. And DZD inside structure, same, but we managed to trade when we hit the other side of the structure. So here we got a short signal inside the structure. We came down to the bottom and the pivot here, and that is when you want to manage your trade go to break even quickly if you want to take this trade at all, because the risk-reward ratio to this pivot is tiny, of course, but to the next one is huge. So if you really want to take this trade inside the structure because the other factors are so good, then you have to be very, very quick to manage these. Simple pullback. I prefer these in really strong trends. Okay, they are basically flip trades. So simply a support resistance flip and get in. Structure breakouts. This is a head and shoulder. We break the neckline. Stochastics are right. RSI just broke out. This is where we can get in. We can also get in at the retest of this support resistance and the pivot, of course. The structure breakout retest. Here we have a flat top triangle. We break out of it. We retest the lower barrier from the back. Great stocks. And in the direction of the overall trend. So my checklist is here. Firstly, M5 stock has to move out of oversold overbought. M15 stock opened into trade direction. Okay, so the mouth of the M15 has to be open into the trade direction, or it has to be closed above overbought or below oversold. We need to bounce from a pivot or SR. This is a must-have. Then I want to have at least 2 other confluence factors. And this is the change I recently made. I want at least 2-to-1 risk reward to the next pivot. So formerly I used a 1-to-1 risk reward ratio. Looking at all the trades I took over the past year, they make money. Setups with a risk reward lower than 2-to-1. They make money, but they are very marginal. So I stay out of them. I preserve my mental capital. I preserve my capital as well. And I take more AAA trades. I take less trades overall now. I make a little bit less money, but I'm positive it will affect my bottom line positively. And then a trigger, as you know, RSI breaking out of the kill zone, Heiken Ashi has to open clear of our moving average. The confluence list I look for, so 3+ confluence makes for a AAA trade. For example, we have a pattern that evolves at a pivot. We break a local trend line of that pattern, and the pivot is at a support resistance or trend line. So the other confluence I look for is pattern, pivot, SR, trend line, local trend line, round numbers, and Fibonacci's. Fibonacci is the latest and actually only the 50% level, but sometimes they line up perfectly and make for great trades. Initial stop loss is always behind the last swing high low plus spread. And the initial take profit is always at S3 and R3, and then we follow our trade management rules. Pip value is king for the money management. As I said, for every $1,000 in my account, the pip value is $1. I never take stops bigger than 30 pips, essentially never risking more than 3%. Every time a new threshold is reached, I take a 100 pips shot, and then I move down and grind back up. Example, if I reach $2,000, the pip value is $2. I go back to $1 pip value after losing $200. At 10,000 pip value is 10, grind up to 20, pip value is 20. At 100,000 pip value is 100, and so on. Essentially doubling my bankroll every 1,000 pips, and rinse and repeat until rich motherfucker. Very easy, very straightforward. Not much else to say here. This is my money management. I know a lot of people disagree with this. It works for me. That's what matters. Management rules. We trail our stop behind swing highs and lows. If price reaches a pivot and breaks through, move the stop behind the pivot. If price reaches a pivot and fails at 2 attempts to break through, or reverses violently, then take profit. If price reaches 66% of entry to pivot without making a swing, or we are already up 3R without price giving us any chance to protect our stop, then we move at least to break even, because we don't want such a massive winner to turn into a loser. That would be horrible trade management. And then we simply trail our price until it fails to break through a pivot or takes out our trailing stop, and we always take profit at R3 or S3 unless the market goes incredibly parabolic due to a horrible news event, which, if price really moves like crazy and breaks out of R3 or S3, then most of the time it is because something really bad happened in the real world. And then we keep making money, as bad as it sounds. So goals and expectations. My pip goals are: I strive to make 25 pips a day. Some days will be losers, some will be winners, and so on, but 25 pips a day is the average. That doesn't mean, however, that I stop trading after reaching 25 pips, because some days I will make negative pips. So you really, as always, in trading you have to understand averages and probabilities. The process goals are, of course, journaling, execution, always follow the process, maximum focus, always follow the plan, be the best trader I can. Everything I can control, I will control. Everything I can't control, I won't sweat it. And last but not least, the adjustment process, how and when to adjust. I utilize Edgewonk to track my performance. I don't care about weeks, months, quarters, years. Okay, the market doesn't really care about that. So every 50 trades I compare that batch of 50 trades to my overall performance. And anything performing worse or better than the norm, I take a closer look, so standard deviation. And I keep looking until conclusions are found. Then I make adjustments step by step, one by one. Alternative strategies can be implemented after a sample of 200 trades. So this is basically my whole trading plan, as I said. I periodically update this if I find something to be useful or outdated in this plan, then I will make adjustments. This is not set in stone. And when you set up your own trade plan, then please, it doesn't have to be as sophisticated as this. I mean, it can be even more, much more in depth than this, of course, but to each their own. As always, simply treat your first trade plan as something like a baby, and it has to grow together with you organically. Alright? It doesn't have to be perfect from the start. I mean, there is no perfection in trading, but you need to have a trade plan and then take it from there. Alright, thank you for your time, and as always, questions in the forum.